Imagine leaving $3,600 on the table. That is a huge sum for any family, and it often happens with the child tax credit. Many people simply miss a crucial detail or they misunderstand a specific rule. This rare but costly mistake keeps thousands of dollars from those who need it most. It is not just a few dollars here and there. This error can truly impact a family's budget for months or even a full year. Think about what $3,600 could do. It might cover several months of groceries. It could pay for important medical bills. Perhaps it would fix a car needing repair or help with rent. For a parent of a young child under 6 years old, this is the maximum credit amount for tax year 2021. The biggest error families make is often not filing a tax return at all. Even if your income is low enough that you do not traditionally owe taxes, you must file to claim this credit. It is fully refundable, meaning you get the money back even if you have no tax liability. This was a major change in 2021. Before that year, the credit was mostly $2,000 per child, and it was only partially refundable. Many low-income families missed out back then. Now it is different, but the awareness is still low for some. Another common misstep is inputting incorrect information about a child's age or residency. A child must be 17 years old or younger at the end of the tax year. For 2021, children under 6 could get $3,600. Children aged 6 to 17 could receive $3,000. These age cutoffs are strict. Sometimes people just fail to respond to IRS letters. The Internal Revenue Service sends important notices like Letter 6475 or Letter 5960A. These letters contain vital information about your eligibility or the amounts you might have received as advance payments. Ignoring them can lead to lost money or even delays. Missing these letters is a major oversight. Another common issue arises from shared custody situations. Only one parent can claim a child for the child tax credit. Deciding who claims the child is important and needs careful thought. If both parents try to claim the same child, this creates a filing conflict. This can flag returns for review and significantly delay refunds. Nobody wants a delayed refund, especially when $3,600 is involved. Income limits also play a role. The child tax credit begins to phase out for single filers with adjusted gross incomes over $75,000. For married couples filing jointly, the phase out starts at $150,000. But here is the thing. Even if your income is higher, you might still qualify for a partial credit. Do not just assume you're ineligible without checking. Many families self-disqualify themselves thinking their income is too high when they might still get $100 or even $200. Every little bit helps. The key is to file accurately and on time. Tax season typically opens in January and closes in April. Filing an extension gives you more time, usually until October. But that is just for filing, not for paying any taxes owed. But the child tax credit is different since it is a credit, not a tax. Millions of families across the United States are eligible for these benefits, yet tens of thousands miss out each year on money they deserve. They just do not know the rules, or they make a tiny mistake. It can be something as simple as a wrong social security number for a child, or forgetting to tick a box on the tax form. Some people also move during the year and do not update their address with the IRS. This means important letters might go to an old address, then they never see the notifications about their missing credit. This is a common and frustrating scenario. The IRS cannot send you money if they cannot find you or if they do not have the right information. To avoid this costly error, you must be diligent. First, gather all your documents carefully. This includes your W-2 forms, any 1099 forms, and most importantly, your children's social security numbers. Double-check every digit. Make sure names match exactly what is on the social security card. If you received any advance child tax credit payments in 2021, you must reconcile those on your tax return. The IRS sent out Letter 6419, which detailed the total amount of advance payments you received. If you report a different amount, it can cause delays or adjustments to your refund. This is another area where errors frequently occur. Many people use free tax preparation software. These tools can guide you through the process, but they are only as good as the information you input. If you put in wrong numbers or forget to claim a dependent, the software cannot correct that for you. It is crucial to review your return before submitting it. Take your time. A quick glance might miss that $3,600 error. Some families think they cannot claim a child if that child did not live with them for the entire year. But the rule is often about living with you for more than half the year. There are specific residency tests. For example, if a child was born on July 1st, they would meet the more than half the year requirement for that tax year. These specific details matter immensely. The loss of $3,600 is a significant financial setback for any struggling family. It can mean the difference between paying a bill on time or incurring late fees. It might mean fresh new clothes for school or making do with old ones. It truly impacts daily life. For families with 2 eligible children, that could be $7,200. For 3 children, $10,800. These numbers are life-changing. Missing out simply because of a small filing error or a misunderstanding of the rules is heartbreaking. It is a missed opportunity for financial stability. If you believe you made this mistake on a prior year's tax return, do not lose hope. You can file an amended return using Form 1040X. Generally, you have 3 years from the date you filed your original return or 2 years from the date you paid the tax, whichever is later, to file an amended return. So if you filed your 2021 taxes in April 2022, you have until April 2025 to amend it. This is a lifeline for many families who realize their error later. Do not delay, though. The sooner you correct it, the sooner you might get that $3,600 or more back. Remember, this mistake is avoidable. Be thorough, be accurate, and understand the rules. Do not let $3,600 slip through your fingers. It is your money, your family's money. This credit is designed to help you not to be a source of frustration. Pay attention to the fine print, consult trusted resources. The IRS website has many helpful publications. A quick check there could save you thousands.